Hello and welcome to the Upside Fund feature. I'm Helen Pang. I'm here today with Marianne Lando. Marianne is an investment analyst on the product research team here at Fidelity. She covers the Fidelity Canadian Large Cap Fund, which is managed by Portfolio Manager Dan Dupont, who's been covering the fund over the last 15 years. Hi, Marianne.
Hi, Helen. Thanks for having me.
Dan Dupont has 25 years of industry experience and also manages Fidelity Global Value Long Short Fund and the Fidelity North Star Fund. And he also co-manages Fidelity Global Equity Plus Fund. Dan is a value investor. Marianne, can you please tell us what that means and walk us through his investment process?
Dan's investment framework is anchored in capital preservation and downside protection through periods of market volatility. His disciplined focus on balance sheet strength and valuation may help limit losses in difficult markets, potentially leading to lower volatility and smaller drawdowns over time, an important advantage for supporting long-term compounding. And he achieves this by seeking durable businesses with strong balance sheets and consistent free cash flow, which helps mitigate the impact of market weakness and support overall portfolio stability. Value investing in this context means being infinitely patient on price until a clear disconnect between price and long-term earnings power. A thoughtful margin of safety shapes portfolio construction with decisions driven by business bottom-up fundamentals and valuation rather than macroeconomic and geopolitical forecasts.
Canadian Large Cap Fund was at 0% energy in January of 2020.
Okay.
And then 9 months later, we were at 30%.
Oh.
Because oil went below zero.
Sure did.
And these stocks discounted a really low oil price for a long time, right? So I go in those directions when the price becomes really easy for me to basically make a decision. And fast forward to today, oil and gas was sold, and now we're at zero because I cannot predict whether the oil price will go a lot higher or a lot lower. And it's true also for precious metals, where we had some positions last year. Eventually they got so high that I had to sell them. I don't really follow kind of free cash flow generation based on the current gold price. I look more at, where is the gold price relative to history, and then when it gets to a point where it's a no-brainer on the downside, then I will put a foot, I guess a toe in the water, or maybe eventually a foot. But, you look back over 25 years, and typically the gold price follows real rates, and it's disconnected from real rates over the past few years because central banks have been buyers.
The Canadian Large Cap Fund specifically is managed with an aim to weather market volatility, with emphasis on capital preservation and downside protection. And recently, there can be a lot of fear in investor sentiment driven by headlines and ongoing developments in geopolitics. How does this fund address that?
Dan sees one of the widest dispersions in technology valuations we've witnessed in decades as markets price in a clear divide between AI winners and losers. He is selectively investing in deeply discounted, high-quality software businesses trading at attractive free cash flow yields while steering clear of more speculative names. Against this backdrop, the fund is positioned more defensively, emphasizing stable, cash-generative businesses in overlooked areas such as consumer staples. In Dan's view, one key change this cycle is that traditional inflation hedge commodities like oil and gold, which were once relied on for protection, are now more correlated with equities and harder to predict, limiting their effectiveness as diversifiers. And finally, liquidity also remains a priority, enabling the portfolio to remain defensive while retaining the flexibility to deploy capital quickly as valuations become more compelling.
I'm trying to stay away from trouble, not trying to diversify per se. If, in 2020, when what was really cheap was oil and gas, that's where we put a lot of our eggs. Because that's where the cheapness was, that's where the least downside was. And so right now, the least downside, where we put more of our assets or more of our capital, is in more defensive sectors, mostly staples. And it's just it's a result of the process bottom up, effectively. So I look at everything around the world, and I've been invested in tobacco for many years now, been invested in spirits for a little shorter amount of time, but still, it's a decent sized position there. And then software is going to start to be a decent sized one. We saw the size of the sectors in my holdings in February without the holdings coming out. It's gone up quite substantially. So I think that's where you need to be to protect the downside.
Let's look at the fund's performance. Since Dan Dupont took over portfolio management responsibilities of the Canadian Large Cap Fund, the strategy in Series F has not experienced a single negative calendar year. Can you walk us through some of the key moments and achievements over the last 15 years?
Canadian Large Cap Fund's track record reflects an investment approach designed to stand the test of time. Since Dan's tenure, the 4-star Morningstar rated fund in the Series F has returned 11.8%, outperforming its Canadian-focused equity category by 2.8%. More importantly, the fund has achieved this without a single negative calendar year, as shown on the bar chart, highlighting a disciplined balance between downside protection and upside participation. These include a diverse range of market shocks, from the 2011 US debt ceiling and Eurozone crisis correction to the 2015 to 2016 China devaluation and oil collapse, the late 2018 equity sell-off, the COVID-19 market shock in 2020, the inflation-driven bear market of 2022, and the recent tariff-related volatility in 2025. Across these episodes, the fund has declined less than the broader market and in many cases recovered more quickly as conditions stabilized. That consistency has been recognized externally as well, with the fund earning 9 fund grade A+ awards and 12 Lipper awards, reinforcing the strength of a process rooted in valuation discipline, capital preservation, and selective risk-taking across market cycles.
I want to thank them for the last 15 years for being patient through some quarters in a few years where they might have thought, well, has he lost his mojo? But understanding now that it's all part of the process, and there's years like 2022 when people need me a little bit, and then there's years where we need to be very patient, but the process is the same, hopefully for the next 15, 20 years, and we'll try to keep compounding at a high rate by protecting their hard-earned money.
Hello everyone, just a quick break in the show to let you know that Fidelity is giving away branded hoodies. To celebrate over 2 million Canadians choosing Fidelity, you can enter for your chance to win at fidelity.ca/hoodie-contest. Performance is more than a number, so choose performance, choose Fidelity. Now back to the show.
Although this fund is called the Canadian Large Cap Fund, it does have the flexibility to invest internationally. Can you please tell us a bit more about that?
With the flexibility to invest up to 49% outside of Canada, the fund's global diversification has been an important contributor to returns. Targeted exposure to select international markets, including Europe, Asia, and emerging economies, has allowed the portfolio to capitalize on more attractive valuations beyond Canada. Dan's disciplined bottom-up approach to identifying undervalued businesses in regions with supportive macro conditions has strengthened the fund's ability to deliver strong risk-adjusted returns in an increasingly complex market environment. Building on his proven global valuation-driven approach, we're pleased to introduce the Fidelity Global Concentrated Value Fund, also managed by Portfolio Manager Dan Dupont. The fund applies the same disciplined investment process investors know from Canadian Large Cap Fund, but on a global stage, giving him the ability to cast a much wider net for high conviction ideas worldwide.
For me, for large caps, there's less of them. We still have a 2% in China. We have a decent amount in Europe generally, maybe almost 20%. But it's not the most exciting environment to invest internationally, mostly from an absolute perspective. Maybe from a relative perspective, somebody that wants to decide whether they want to invest in the US or global or internationally. International is still somewhat cheaper. But for me, the whole software wobble has actually brought me back somewhat to the US because that's where the software companies are. There's really not a lot of good, large software companies outside the US.
And that's all for today's show. Please follow us on our socials, including Instagram, YouTube, LinkedIn, Facebook, and Reddit for more great content and the latest financial updates. You can also head to fidelity.ca's investor education section to check out our articles, sign up for the Upside newsletter, and get information about upcoming live webcasts and on-demand videos. Whether you're learning investment basics or looking for more advanced knowledge, we can help you become a more informed investor. As always, working with a financial advisor is among the best investments you can make. Thanks for watching, and I hope you'll join us again on the Upside.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.